With more than 6,000 small and micro-cap companies listed, if you're looking for the next apple at the earliest stage, then channelchek truly is the orchard. The listed companies support channelchek, so it's free for you, the potential investor, to gain access to institutional quality research from FINRA licensed analysts, advanced market data, industry reports, news, and a growing catalog of videos and webcasts. Make sure to subscribe to our YouTube channel and register for channelchek so you're always up to date on what's going on at the small and microcap data place. Welcome to the C-Suite series presented by channelchek and Noble Capital Markets. Noble is an SEC-registered, FINRA-licensed broker-dealer and the source of the equity research available on channelchek. Today's interview features FenixOro Gold Corp, OTC ticker symbol FDVXF. Noble Senior Research Analyst Mark Reichman interviews FenixOro CEO John Carlesso. Visit channelchek.com or click the link in the description for Noble's research on FenixOro, as well as news and advanced market data. And now, here's Mark and John.
Hi, John. It's great to see you.
Hi, Mark.
John, would you please share a little about your background and the genesis of FenixOro Gold Corp?
Sure. It's we started looking at opportunities, really new opportunities in Colombia towards the end of 2018 in an area that I had been familiar with from kind of last cycle. The appeal of finding some a very similar, in our view, a very strikingly similar asset grouping to the Continental Gold Buritica project, now Buritica Mine, was appealing. At that time, the gold sector was sort of out of favor, so we felt the timing was good in terms of being able to put a package together. And really, kind of that was a genesis of it. Thinking long term. We ended up going public finally in May of 2020, so it did take some time, kind of put the pieces together. My background has been in the junior precious metal sector since around the 2001-2002 timeframe. My first exposure to the industry was with a company called Zijin Mining, which was really a great experience working with guys like Bruce Humphrey, who was our CEO. He was prior to that, he was the chief operating officer of the Red Lake mine. So a really tremendous mining background. A guy like Peter Tagliamonte, who was our VP operations at site. This was a restart of an old Anglo mine in Brazil. And so a lot of exposure. It ended up being a very successful venture. We got sold to Yamana for about $750 million a few years later. And I got the bug after that to kind of go dive in headfirst into the mining sector. Really, my focus has always been on gold and silver primarily. So I had known Stuart Moller from some time I spent in Bolivia, kind of a few years after that. When he was with Pan American Silver, Stu was head of their exploration for 10 years prior to him going to Continental Gold to be the guy who actually discovered the Buritica Mine. So pulling Stu out of sort of semi-retirement, where he was looking for things to do at that time, it all kind of came together a bit serendipitously, and here we are, kind of almost 3 years later now. But it's been a fun ride, and we think we're about to hit. We're really hitting our stride. We're having a lot of success and about to really launch something quite special.
So, John, would you provide a high-level sketch of the gold project, including where it's located within the Mid-Cauca trend and its proximity to other gold discoveries?
Yeah, it's a great question. The Mid-Cauca Gold Belt is a very well-known trend that hosts many multi-million ounce deposits. You have Anglo's La Colosa at the bottom, you have B2 Gold's Gramalote in the middle, and of course you have Buritica at the top. Continental Gold's major success story, 11 million ounces and counting at the time it was sold to Zijin Mining for 1.4 billion in early 2020. We're the closest project to that, and very much a geological look-alike to it in terms of what we're terming Buritica style mineralization. So we're just over the ridge from that, a little to the west of it. We've managed to put together pieced together several property claims that I think give us something very, very prospective. The ability to find something very similar. Early indications are that we are finding something very similar in terms of style. Project area that we have is about 13, almost 1,400 hectares, which just again could fit several Buritica deposits as we know them today, based on the key characteristic of this trend, which is the depth potential that these veins have, over 1 kilometer deep. And we're seeing that at Buritica as well. I'm sorry, at Abriaqui as well. So lots of potential, very, very well located to what I would say is, and the closest project to what we view as the most successful, perhaps the flagship modern scale mine being built in Colombia today. So it's a really great location. We're in a great neighborhood. Best street in the best neighborhood in all of Colombia.
Well, you already touched on it, but for investors that may be unfamiliar, how is the business and political climate in Colombia, and why is it fast becoming a destination for mining companies?
Yeah, listen, we really like Colombia. I've been going there for probably 15 years now. And the business environment is great. The economy has been one of the leading growth economies, particularly in the technology sector, for many years now. GDP has always been top 3 in terms of Latin American countries. Very technologically savvy workforce, very safe. Never had a security incident in my experience, whether I'm in the city or in the country. And I touched on the prospectivity regarding exploration opportunities, and I think it's been a learning curve, to quite honestly, for the government as it's transitioned to permitting large scale modern mining operations such as Buritica and Gramalote, and I think these are the first time that large modern mining operations are being built, and so the country is understanding what the benefits are and how they can streamline those and expedite the permit process so that exploration can happen and mines can get built and royalties and tax revenues can be generated and thousands of jobs can be created. So I think the country is really understanding that now. The government is understanding that. We're seeing a movement to really facilitate those things. We certainly have a lot of local and provincial and federal support for what we're doing, the job creation that's taking place. So we're quite bullish on Colombia, to say the least.
Now, how much past exploration has been done on the property?
It's always been in private hands. That's what's sort of interesting and unique about this project. Our local partner are legal small-scale miners who have been, working in a very rudimentary way, in a very artisanal mining style. Some areas of this project we've certainly added to it and created a bigger footprint, but the 2 central portions have been worked for at least 3 generations, perhaps longer, that we're aware of. So the benefit to that is that they've done a lot of the prospecting work for us. Before we even set foot on the property, there was in excess of 100 vein structures and known mines on surface. We were able to build on that, build our database, take lots of samples, and really combined with Stu's experience and knowledge base of what Buritica looks like, really start building a model, I think, much more quickly and much earlier than we would have been had we been starting from scratch. So that's been an important part of our development, how we've been able to kind of rapidly develop a picture of what we think this deposit looks like. It is a gold deposit. We firmly believe it's going to be a mine. We think the hard part, the discovery, is behind us, and now we're focused on the details. What's the geometry? What does it look like underground? How is this thing travel and in terms of dimension. So it's an exciting phase, and we think we're very happy with how quickly we've been able to go from 0 to 100.
So before we get into the drilling, how accessible is the property, and what are the infrastructure needs?
It's very accessible. Distance-wise, we're less than 100 kilometers from Medellin, which is the second largest city in the country, and it's the capital of the province of Antioquia, where we're located. By car, currently, it takes about 3.5 hours to get to site, and that's not a function of anything other than you're using small roads that tend to wind through the mountain. So it's a slow drive. You're probably going 30 miles an hour at best for most of it. That's changing though. To put that in perspective, it's about a 40-minute helicopter ride. So it's not a far distance. It's just a slow winding drive. That is changing with there's a major infrastructure program going on in Colombia right now. $25 billion over 10 years being spent on roads, bridges, tunnels. That's going to create a lot more access for us. It's going to shorten the drive time to about an hour and a half. You can already see the benefits of that in some of the larger centers. There's a tunnel that cuts the drive from the airport in Medellin to the city center from close to an hour to 20 minutes today. And we're going to be one of the beneficiaries of what's going to be the longest tunnel in Latin America when it's completed. I think about 13 kilometers. So access is improving. It's year round. The weather is not an issue. Climate is very very amenable. The rainy season isn't something that slows us down. It might cause us to take shelter for an afternoon or so, but this is a year-round project in a great location that's very accessible.
Now, phase 1 drilling was completed in March of 2021, and phase 2 began in June. Could you just walk us through the exploration program leading up to the drilling program, and then also how the two phases differ?
Yeah, so as I mentioned, we came in with a pretty good head start given on what the local miners had done, and we had already identified a number of structures that we really just had to go and check out, take samples, map was a big one, and then we did a pretty massive soil sampling program that covered virtually the entire central portion of the project. That gave us a lot of clues as to where we start. So we focused on, there's really two key portions to the block that we're concentrating on, and I think it's important to note that the area we're working right now is a small portion of our total project area. It's just what we're calling the northwestern block. Within it, because this system runs so deep, these vein structures, according to our work, we've traced them at 1,000 to 1,200 meters in depth. That's a very similar characteristic and an important characteristic when looking at how this compares to Buritica. The original resource at Buritica, the 11.5 million ounces that they had at the time they were sold, it does not cover a large surface area. It's about 1.5 kilometers by 600 or 800 meters. You could fit that area kind of 4 or 5 times within our northern block. But the reason that can contain so many ounces is because of this depth, and we see that similar characteristic on our project. So we're really focused on identifying two main structures. We have, if you will, an east-west structure in that block and a northwest trending structure that we're trying to figure out how they come together. Most of our drilling has been on the northwest structure, northwest trending family of veins, and there are a series of stacked veins that are represented by high-grade centers surrounded by lower-grade wider zones, and that's really what we call Buritica style. The benefit to that is you can mine that in a very efficient way, and Buritica today I think is the 4th lowest cash cost producer in the world at about $600 per ounce. So we're a long way away from doing a feasibility study and having actual engineered mining costs, but we're seeing the same types of structures, high-grade veins surrounded by lower-grade mineralization that give us these wider zones. Some of our, we have intercepts that are 6, 8 8 meters of almost 9 grams. That's very typical of Buritica. We've got an 11.5 meter zone of almost 6.5 grams, and we have high grade veins that are 1 to 2 meters wide in the 50 to 75 to approaching 100 grams per ton in some samples that we've taken in mine. So all the elements are there. This first phase was really about just trying to figure out the structures, how they line up, what's in between them, and particularly with a focus on that northwest trending set of veins. And we were able to, I think, pretty clearly define that these things do carry. They're long running structures. The Santa Teresa vein is the longest that we've discovered so far. It's over a kilometer that it travels on surface. Depth wise, we know our deepest intercept is about 600 meters. We're starting to get an understanding of the varying thickness and the varying grades, and we've put what we think are some pretty conservative assumptions towards building some blocks, some potential resource blocks around these vein structures. And we announced in March of this year that our initial target is around 2 million ounces. Given what we see and how we're carrying some of the data points and the drill intercepts that we've experienced, so that's kind of our starting point.
Okay, I wanted to pick up on that. Originally I think the company had put out kind of an informal resource estimate, kind of in the 1.6 to 2.4 million ounce range. You've recently put out some drill results. So how has recent drilling informed your thoughts on the mineral resource potential?
Very positively. As I said, we tried to be conservative in the data that we were using to build the initial model, and we used only the drill intercepts in terms of what the assumptions of what this block looked like. How wide is it? What is the average grade? And that's how we built it for the first phase. The drilling from the second phase has shown us that we can the averages that we were using for widths, for grade, etc. They're all skewing higher. They're all trending higher along the Santa Teresa. The data points are increasing by over 50% along the Orquídea and Romparopa vein structures. It's about 25% increasing in some of these assumptions. So it's all trending in the right direction. We believe with the current hole we're drilling, hole 14, we're targeting mineralization about 250 to 300 meters deeper than our deepest point. So that's going to add some vertical extent and potentially significant tonnage in terms of the vertical extent of these vein structures. So we're building on, I think, a positive start, and it's looking like we are being conservative, which is what we want to be. We'd rather upgrade than say, we're a little too optimistic and we're gonna cut that back. So it's going very well. Our target, we think we're still really just beginning to understand the potential here. We see ways that even if we don't identify new structures, that the existing ones will grow. And these are really long-winded answers, so I apologize for that. But I think an important point is that we're modeling 4 structures only, 4 out of 120 on the property, and that's what we're working with now to get this 2.5 million ounce model. We're about to, by the end of phase 2, I think we'll be able to include about 10 vein structures. So again, just by as we add more data points, we're going to add more size and depth and structure to these. So it seems logical to us that it should grow just with structures that we know about now without any new discoveries.
When do you expect to complete a maiden resource estimate, and how many vein systems do you think it would incorporate?
I think by the end of this current phase, we will have incorporated at least 10 structures, up from the 4 that we're using now. So that's going to be key, and I think that will really start defining a path to how we grow, or how we can continue to grow this existing model. It's currently 2.5 million ounces per our press release. we're seeing how, as I mentioned, how that's growing. I think that'll put us in a position to have the first formal resource calculation following this phase 2 program that we've outlined. So we're getting pretty close. Our objective is that to on the known structures, keep demonstrating that they're getting deeper, longer, thicker, adding higher grades to it so that we can build those assumptions. We haven't really talked much about new discoveries, but we do have some areas that we intend to drill that would represent new discoveries and the opportunity to perhaps replicate what we're doing here in the northern block in some locations like the southern block, which we think has tremendous potential as well.
So what does the program look like for the remainder of the year, and what are upcoming catalysts for the stock in your view?
We're going to continue on with this phase 2. That's going to include, as I mentioned, demonstrating that the known structures are growing in every aspect of dimension and grade. And we're going to do a bit of discovery drilling as well in the southern area. The interesting part about the south is that it's higher elevation. So that gives us the opportunity to add about 800 meters of vertical extent to these structures. We mentioned that this is all within that northwest trending family of veins. They continue through a fault to the southern block. We think it represents tremendous potential there. We're hoping we can duplicate the kind of success that we've had in the north. And there's an area between the two families, the northwest trending and the east-west trending, where we've had some intercepts. The one I mentioned earlier, just under 8 meters of just under 9 grams per ton. We haven't been able to build a block around that yet. It's just a single data point. So we can build some tonnage and demonstrate, have a little better understanding of whether that's part of a northwest trending block or one of these perhaps new structures that cut through the northwest family of veins. That's going to be something that's pretty significant as well. So there's a lot going on here. It's all, as I said, pointing in the right direction, and bodes very well for our future. And I think what this project is going to look like, say, in a year from now.
Could you also talk a little bit about the company's liquidity and funding needs?
Mm-hmm. We haven't done much in the funding department in terms of since we've been a public company. When we went public, we had about $1.5 million in cash, and we had about $3.5 million of unexercised in the money warrants. We've been utilizing those. For the most part, those expire in November. So from that kind of incoming or organic means of financing perspective, that's kind of winding down. We did raise $1 million in February. We're very conscious of trying to limit the dilution of our capital structure, and we've only sort of taken what we need at this point. But we see ourselves in a good position to sort of fund the rest of this program internally, hopefully the results that we're continuing to generate will resonate with the market as they have, and put us in a good position to raise some money when we do need it. We are still in exploration phase, so I mean, for a certain period of time, we're going to be dependent on our ability to raise capital. We think we've demonstrated enough potential and existing and growth potential to be able to do that.
And lastly, what differentiates FenixOro from other gold exploration companies, and why is now a good time to invest?
Yeah, well, that's a kind of a loaded question. I think we've got a lot of really great things going for us. The top of the list, I would say, is our team, particularly Stu Moller, our VP Exploration. Stu is the guy who really knows this. I think not just Colombia, this particular area of Colombia, the particular style of mineralization that we're hunting. He is the individual who is responsible for the discovery of what Buritica is today. And I think there's nobody better positioned to really kind of make that call to say that what we have is very similar and holds the same type of potential. So what is that potential made up of? High grade gold. In these Buritica style veins, wide zones of lower grade material that give us potentially the same type of mining operation if we can continue to build this towards a mine, towards a feasibility study. And I think we've really put the most difficult step behind us, which is the discovery has been made. That's what phase one generated, and we're continuing to advance this with phase two. We've done the hard part. Discovery's out of the way. We've taken a lot of the risk out of this. In our view, very firmly, this is going to be a mine. The question is, how deep is it going to go? What's the average grade going to be? What do these structures look like with a little more definition drilling? We'll start to answer those questions with upcoming phases. To top it all off, you can have that today at a valuation which is virtually the same as when we went public at, despite having made the discovery that we have. So add it all together, it looks like, in my biased view, a pretty good picture.
Well, John, thank you for joining us today.
Thanks for having me. It was a real pleasure.
Thank you for joining us for this C-Suite interview presentation brought to you by channelchek. Visit our YouTube channel for more interview content, as well as virtual roadshows and conference presentation replays. New content is added regularly, so subscribe below to stay up to date. Visit channelchek.com or click the link in the description to access equity research, news, and advanced market data on this and the 6,000 other small and micro-cap companies listed.